And right now, folks, as we do each and every Tuesday and Thursday at 30 past the hour, we're going to talk to Tim Ord. You can check out Tim's website, folks, ord-oracle.com. You see Tim there. And don't forget, head on over to the front page of TFNN, right under the Services tab. Tim's got a couple of great webinars, The Secret Science of Market Tops and How to Identify Market Tops, as well as 6 secret ratios every trader should know. And don't forget about Tiger Dollars. You can get those Tiger Dollars and apply them, add more savings even than that. Tim Ord, good afternoon.
Good afternoon. So this is a week before Christmas. Week from today is December 20th. So year's coming to an end. So,
it sure is, man. We got, a little CPI data out this morning, Tim. We have markets reacting favorably, a little bit of chop. What are you seeing in this market?
All right. This is, I showed this last time, but this is the, let me get my little drawing tool out here. Make it black. All right. This is the daily SPX VIX ratio, and down here is the SPX, and we still have that divergence, even though the market's kind of got wonky here over the last couple of days. We did hit a new higher high on the SPX VIX ratio, and the ratio leads the S&Ps. So if you notice, the S&Ps made a lower high compared to the October high, but the SPY made a higher high. So at some point, at a minimum, we're going to go back up and at least test on the SPX VIX ratio, at least that high. So anyhow, in a nutshell, the VIX is bullish. It's and the SPX to VIX ratio is bullish. It has a bullish diversity, even though we pulled back here for about the last week. It's not a top of any consequence. We got a little bit of panic. We had a 10-day trend. It's not up to snuff. We're up around 106, which is not real bullish. But this is the bottom window is the ARMS and 2-day average of the ARMS index going back to this is July period back here, and shows all the times in pink. All this pink area here are times when the 2-day trend got it to 1.2 or higher, and we hit that a couple of days ago, and we fell back. But I marked all the times in the past, and all of them came near lows here. And this other pink area going sideways is where the trend reached 1.2 and higher at a price level on the SPY. So that's normally you go back into that area is use a support area. So we had a support area around 670 area, then one below that comes in, give or take, around 640. So we kind of went through it, came back down to it, but we hit it yesterday. We bounced out of it today, but the trend's showing a bullish divergence here. We do not have enough panic. This seasonality is bullish. Actually, it started being bullish, I think, on the last week, December 14th. And even though we retraced here a little bit, I think they were just trying to fool with the market. Here's another way to look at the trend. These are, I listed the days where the trend hit 1.20 or higher. And a lot of times they come near lows. We kind of blew down a little bit. But we had one here. This is Monday. That was actually a bicycle. If you get a trend of 1.2 and higher, and on the same day you get minus 200 ticks or lower, it predicts the bottom the same day as those readings to as late as 2 days later. Well, 2 days later was yesterday, and the market made a low. Now we gapped up. So I'm still thinking this vicinity in here is still a support area, and we have a lot of different ticks in that region. If you go back into that area, you can see a lot of trend readings in this vicinity. This, I don't know, 660, 670 area, 675 area. So I'm still thinking we're going to hit new highs. We got a positive VIX ratio. We got panic in the ticks and trend. We got two different methods doing two different things, kind of say the same thing. So even though we're kind of fooling around in here, I'm still bullish. I still think we'll hit new highs. And the Christmas rally is supposed to start on the 20th. It hasn't started yet. On the 14th. We have pulled back, but I bet we still rally through Christmas and possibly into the new year, and I think that's what's probably going to happen. So I'm still bullish, even though it's kind of back and forth. we'll hit new highs. Pretty sure. And actually, this high back, I forgot what date that was. That high has not been touched yet. We came close to it on this day, but we didn't touch it. And markets don't make a spike high and come straight down. Bottoms can, but not tops. Tops sometimes are double tops, triple tops, quadruple tops. Sometimes they bang at those tops 5, 6, 7, 8 times before the market turns down. We haven't even touched the top yet. So if this is even being a top pattern here, we still haven't seen the final highs. So I don't think it's a top pattern, but I think we'll break through with a sign of strength. So anyhow, I'm bullish. I'm still staying long. And here's another one more thing. Far as the this is a sign of, we did have a panic reading. This is the 5-day average of the advanced decline on NYSE. I marked the times when you had a panic sell. That's all these areas here. This is daily SPY right here. And then you have to have a sign of strength after a panic decline. We had that coming off the low in, what was that, October, I guess it was. Or maybe, was that November? Yeah, it was November low. So yeah. We have panic, and you have a sign of strength. If you didn't have a sign of strength, that would be a problem. And we did have a sign of strength. So there's a lot of stuff. I'm in the market at a great price, but I see no reason to get out of that long position. So I'll put it that way.
I mean, that chart, I remember that chart. That's a powerful chart, man, in terms of how those line up, the bottoms and the accelerations, even the SPY on the bottom. I mean, those areas, man, boy, each one of those shaded areas, the beginning of a pretty decent uptrend. Yeah.
Yeah. And sometimes, the market, this is back the 22 low back in here. We had, 4 of them. It's a little bit different than this WAG breast thrust indicator. And this is a little bit easier to I guess, manipulate by your computer. It's not as complex, but it works just as well. But if you have to have a panic bottom, and after the panic bottom, you have to have a sign of strength. If you don't have a sign of strength, then you're going to look like something like a 2008 type market where it just keeps going down, and you get panic readings, but not a sign of strength. And here we have that, so it's bullish.
Pretty cool. All right, folks, we got markets in the green. We're coming back. We're going to talk some gold. We'll talk some metals, some equities with Tim. Stay tuned, folks. Tim and I are coming right back. Welcome back, folks. Markets in the green right now. S&P up an even 1%. You get the NASDAQ 100 up 421 points, up 1.7%. We're talking to Tim Ward. And don't forget, folks, Tim's got a couple of great webinars under that services tab at TFNN and his website, ord-oracle.com. And where are we going to next, Tim?
I showed this chart probably for the last month, probably quit showing it. But I'm trying to emphasize that I think a new leg in the gold market has started. And this is one of the charts that kind of proves that idea. Where it turns out to be true or not, we'll have to wait and see. But anyhow, it's the monthly, I'll get for some reason my drawing tool dropped off. But anyhow, this is the monthly XAU to NDX gold ratio. It shows the gold stocks against the NASDAQ stocks, and it had a change or an initiation of an uptrend or a change of character, you call it. And this is the first time the RSI of this ratio got above 70 or thereabouts, going back to 2000. So this is going back to 20, or actually, first time it done it since, it was back in, I guess, 2008. But anyhow, it's been multi-years since this happened. And when you have a change of character in the market, that means the market's shifting. So what it's saying is probably what's going to happen over the next several years, and it could be 12 years, is that gold stocks are going to outperform the NASDAQ stocks. So, having said that, I was actually, me and your dad were in the 2000 bull market of 2012, and those gold stocks did phenomenally well, and they did phenomenally bad from 2012 to 2014. Now we're back to or 2024. And now we're back on the plus side again. When these stocks fly, they fly, and when they don't, they don't. They're like lead balloons. But right now we're in a fly time, so it's going to get a lot better before it gets worse. So, but anyhow, this rally could last into 2036. That's a possibility. So we'll monitor as we go forward. Cool. Yeah, so it's I've got a lot of these. I've kind of been buying the real penny ones, and those things been exploding off the lows. TIG.V. I don't even actually look at the names, but I just bought it here, I think a week or two ago, and it's already doubled. But anyhow, and and they're going to rotate back down to the smaller ones. And I think that rotation is starting right now. The big ones have screamed up. They have really have gone probably just as far as they're going to go over the next several months. They'll probably head to a consolidation. But I wanted to point out, this is the next chart. I thought it was real interesting. This chart goes back to 2014, and the middle window is the daily silver gold ratio, and I put this chart down here is a rate of change, so it's on a 12 period, and momentum in the market's really important. And if you get momentum on your side, you stay with the momentum side. So if the momentum's going up, I use the Bollinger Bands for that. Usually the weeklies work the best. But as long as the market stays above the mid-Bollinger Band, I buy the pullbacks. And vice versa, if the Bollinger Bands are heading down, and I sell the market once it gets back to the mid-Bollinger Band type thing. So momentum really works. It increases your odds of success. So you always want to go with momentum. So what I did notice here, this is the rate of change, 12 period, for the silver gold ratio. In other words, when it gets above 10, you get a pullback, then you get another surge. And this is the GDX up here. The top one was the GDX. And the first surge up was there, and the market was basically halfway done. And it rallied probably for, looks like about, I don't know, I'll say 3-4 months. Rallied another 3-4 months. Then we had another one in 2020. This kind of a COVID crash. Had a ROC above plus 10. And you had a consolidation, then you blew higher again, looks like by another 3-4 months. You had the same thing happen in 2024, got way above 10, and market pulled back a little bit, but kept on going higher, looks like for another 6 months or better. We just had one, we actually currently have one right now. It's a plus 1130. You may consolidate here a little bit, but that's not the... If they have anything characteristics of the previous past, you may consolidate here a little bit, but it looks like you may actually still can't continue to work higher. Then the second one is where you get the top. You know, this is the second ROC reading above 10. There's there, and then didn't really get a signal there. But the market went up for another 6 months. So I'm not really in a hurry to sell here because you got a lot of momentum pushing this market higher. And even on a short-term basis here, this is the daily, so you can have buy and sell signals on daily, and the weeklies remain on a bicycle, and the monthlies may remain on a bicycle. But anyhow, these two indicators are still basically holding. The bottom window is a cumulative advanced decline for GDX, and the next window up is the cumulative up-down volume for GDX, so it's a cumulative. And I put a Bollinger Band on it, and as long as these two indicators hold above the mid-Bollinger Band, which is all this green area, the market's in an uptrend. When it's below the Bollinger Band, the market's in the downtrend. So I didn't go back real far. It goes back a couple of years, but this is current. This is up-down volume indicator cumulative. Right now, it's not really showing any weakness. We're holding above the upper Bollinger Band. We're kind of still working higher, and so is this indicator. It's not pulling back at all. So I'm still long GDX. We're up against the previous highs of October. I said we had an upside target around 85. We're 80 on this chart. It's about 86, and I'm not seeing any weakness here. So we may continue to push higher. So I don't know. I'm still long. Momentum's key on what goes on here. So, you know, Gold stocks are doing fine. I think there's just going to be a big rotation in the market, and the leaders of the last year or so may take a rest, and the secondaries and the thirdaries may come to the forefront. So I'm not seeing anything real bearish here. This is momentum. So I'm not guessing where the top is. I have to let the market tell me where it is, and I don't see any, at least so far today, I'm not seeing any problems. So I'm long gold.
Gold's hitting
GDX.
all-time highs, I was going to say, Tim, right? And it's just right back up there, man, 44.09 on the futures. And it's pretty cool momentum, because I agree with a ton of what you're saying. And just even in life, right? And that's what, I love that, charting, it kind of sometimes it's just, it's the emotions, right? The fear, the greed, the all of us. And yeah, momentum, man. When you're in momentum in life and the force is pushing you one way, it makes sense. I just love how it looks, and I agree, a lot of it. And yeah, hey, all-time highs today, in that gold contract. And silver just looks remarkably strong. A lot of volume in silver, too. I'm not sure if the volume in silver is just remarkable. It just keeps coming, man, every single week for silver.
Yeah. Actually, December 20th, which is basically Saturday, but the seasonality is one of the most bullish periods for gold. So we're going into a seasonality period. The seasonality is not exact science. Can it be several days earlier, several days late? It can. But seasonality is the most bullish starting December 20th. So we have seasonality bullish right in front of us. So may keep pushing.
They're buying. I was going to say, if they're buying gold for Christmas, $4,400 an ounce. There you go, folks.
Jeez.
Tim, great stuff, man. I appreciate it. We'll talk to you one more time before Christmas. We'll talk to you on Tuesday. Have a great weekend, man.
All right. Thanks a lot. Talk to you then.
Thanks so much. Stay tuned, folks. Come right back.